Do not be fooled, as many have tried to guess what this chart is over here. And I said that today's show is going to help to rewire your brain and shift your paradigm when it comes to viewing charts. So I'm very, very excited for the show. In just a moment's time, I'm going to reveal to you exactly what this chart is. But we have a lot of different guesses over here. People guessing ETH, BTC, Chili's, Dexy, Luna. We have the CZ scam bot over there. Oh my gosh, so many messages from the scam bot. Avocados. We have Dominance, Atom, Dexy. All of you are wrong. Every single one of you are wrong. And I'm going to show you in just a moment's time what that chart is. And there is always a bull run somewhere, but it's not exactly what you think. So let's get straight into the charts over here. I want to start off again with the high time frame chart because there are some important things to look at which we haven't looked at for a while. You can see that currently the Bitcoin price is 19,761 and it's caught at a very, very key level, which is that second quarterly close. Unfortunately, it's still sitting below that second quarterly close, which would be erring more on the side of bearishness than bullishness from the high time frame. But I do think that we're close, and I'll show you exactly why I think that. Looking at the MACD on the monthly, you can see that it is still angled down and the histogram is still strengthening, but ever so slightly, it's looking like if it can close around here or any less, then maybe this histogram will start to slow down, and that of course would be a positive sign for crypto in the long run. Looking at the RSI over here, it's never been this low. This is definitely the bear market of never befores. Many things that are happening now are happening for the first time ever, and of course it's got a lot to do with the global macro environment and everything that's happened around the world, with COVID and then money printing, and now we're in quantitative tightening. So a lot to consider. And when looking at these RSIs, you don't want to be the guy that says, well, it's never been this low, so time to bounce, time to buy, time to turn bullish, because this has still got a long way to go down. Contrary to popular belief, a declining RSI is bearish. Just because it's got below these levels doesn't mean it's time to start aping in. So that's your higher time frame over here. Now, what sort of economic events could we be facing in the next coming weeks? Here you have Miles. He says that the key upcoming dates which you need to watch is September the 13th. There's going to be CPI data. September the 15th, and they keep moving that date, is now the ETH merge. Then we have September the 16th as the Mt. Gox claims for the deadline. That's a deadline for those claims to finalize your submissions. September the 21st is FOMC rate hike decision. And then September the 22nd is the ADA, so the Cardano Vassal hard fork. So September is definitely going to be a busy and interesting month, and there's a lot of different things that could be going on which could move markets. And I'm going to show you some of these mentioned dates. We look to the charts, right, for guidance of where price action may go, because essentially the charts are showing us where the supply and the demand is, and that is what moves markets. Some of these charts actually look bullish, and most of them do look bearish. I'm going to point out to you towards the end which ones are in fact bullish. So here we have our logarithmic regression curve. We have touched a lot on this chart, but the reason that this one is significant is because we have 6 days left to go. And look, I mean, it doesn't look too bullish if you ask me. This candle over here is marginally green, but with a full body red candle that printed on the last 2-week close. As soon as this one takes out that low of 19,535, you could have acceleration to the downside. And this was 12 weeks and counting. I think this will be the 14th week that we've now closed outside of the lower band. I mean, unless we absolutely rip above $27,000, then it's going to be 2, 4, 6, 8, 10, 12, 14 weeks, guys. Over 3 months, 3.5 months of being outside of that lower band. For a long-term investor, I mean, that's not too great. You want this thing to capitulate, hit the major demand zones, and bounce out of that area as soon as possible, because you don't want to spend. That changes the whole macro picture the longer you spend underneath these bands. So looking at Bitcoin over here, though, on a weekly chart, we have some important considerations. And again, as I mentioned, it's the time of never befores. Never before. Many things have never happened before. We've never spent this much time under the 200-day moving average on a weekly chart. And now also for one of the first times ever, you have the 255 MA, the orange one over here, Price sadly has pushed into that. We broke above. It's now rejected off of that. It's literally using that as resistance. I would say that is now confirmed resistance, this moving average, and that's not a good sign. You have the new week, which opened into that resistance over there, and then completely rejected off, and this week we're pushing down. So the bulls really need to get moving. They are running out of time if they want to salvage this. Here is your new weekly range. As always, I readjusted. We're in a tighter range. Remember last week we had this big range from the top of this candle to the bottom, much wider range to work with. Things are getting tight. When things squeeze and they get tight, it's an indication that volatility is very, very close to entering into the market. Could be a matter of days or weeks from coming into the market. And your new range high is going to be the top of that wick at 20,575, and your range low is going to be at 19,552. This is a critical level over here, the previous week's low. If we start to take that level out, then you're going to get that acceleration to the downside. For now, though, you can kind of play ping pong if you are a short-term trader, essentially short selling the top and longing the bottom of that range with stop losses both above and below, depending on which way you're playing the move. So couple of important tweets to get into. Here we have Charles Edwards, and he says here that every time a Bitcoin OG has moved 5,000 plus Bitcoin in the past, then price has subsequently dropped 20 to 80% in the following month. So will this week's transaction at 19,600 be the same, or is this time different? Again, this is the whole season of, is this time different? And when you look at this chart over here, let me just expand it. So you can see every single time we had a major spike in the volume over there, the transaction of these coins or moving of these coins, massive sell-off. Look, 20 to 80%. Look, I think 20 to 50%, 80%. I'm not that bearish. Although it is possible, I'm not that bearish in the long term. So also Crypto Quant, they produce something very similar over here with the movement of the coins. They said that miners are continuing to sell. This is already the fourth largest transaction from miners to exchanges in 2 months' time. And it paints exactly the same picture over there. So we have also very important is the correlation with the dollar index. Just in the US dollar index has hit a 20-year high of 110.25. My next target is around 111. I'll show it to you on the chart in a moment's time. But first, let's take a look at the Irishman. Great account. Make sure you follow it. Lots of alpha over here and very reliable. You can see this is the DXY and the S&P 500 futures. And you have a perfect inverse correlation in the prior 8 months with these charts. The DXY just making a higher high. And then he says here that it seems very telling as what is to come. So the SPX is to follow with a lower low, be aware and plan accordingly. And if we click on that, open that up, then you can have a look at that correlation over here. So you would be essentially targeting, you're now looking for a hopeful double bottom, although I don't really believe too much in double tops and bottoms. Usually I think if price approaches that kind of a resistance or supports, with a lower high, most likely it will continue on through, and that is exactly what you're looking for. So here is your DXY. It's holding a very strong trend line. You now have confirmed high highs. I already knew this days ago. I told you guys already back here when everyone was debating a double top, and I said no way. At the very least, you'll maybe get a higher low that forms on this trend line. Otherwise, this thing is marching on and continuing, and that it has done. When you look at this candle over here, this is probably going to signify that that this today is at least going to be continuation. And there's my ultimate target at 111.295. This is in the short to midterm. And then I would probably expect that's going to continue on higher, as I've shown you many times before. The ultimate macro target is the 6-month key level at 119. Now, you got to ask yourself, why is the dollar so bullish? Because obviously the Fed printed so much money. They should have technically devalued their currency. Now they're going through quantitative tightening. But sometimes you just need to go look at what the DXY is created from. And if you just literally type that in Google, what is the DXY comprised of? You'll see that it's a weighted geometric mean of the dollar's value relative to other currencies, which is the euro. It forms 57.6% of the weight, and the euro is extremely bearish. The euro is doing terribly, and they're in big trouble with everything going on there with gas. And this is one of the main reasons for the DXY running in the way that it is. You have the Japanese yen, which forms 13.6% of it. And the only one that is strong in this composition of what the DXY is probably going to be the pound, which only forms 11.9% of the DXY's weight. So I'll be watching the DXY very, very closely. But moving on, a couple of other charts over here. You have Seth Golden, and essentially what he's saying here is that every single time the market bottom has signaled by the 5-day MA equity only PC ratio of 0.75 or better. And it happened in June the 16th. So I don't want to confuse you with this. Essentially what he's saying, this is the ratio between the calls and puts on the market. So when the ratio of puts gets above 85, when you look at these levels over here, that has typically signaled a major market bottom. And all that I'm trying to portray to you over here is that we could be very, very close. So this can still shoot up a lot more, and a lot of people could be taking puts. They may be also hedging. I don't know. But when the puts get to above 85, you can expect your major market bottom to form. But we're currently sitting at 81. So another 4 points on this scale could still mean a lot more downside is ahead of us. So you have to be cognizant and cautious of that. Another canary in the coal mine warning sign over here. And for those of you that are bullish, just stay tuned. There is some good news for you. I know that I'm hitting you with bearishness after bearishness tweet over here. There will be good news for you. But like I just mentioned, it's all got to do with the euro, and it is one of the canaries in the coal mine. And it says the 1-year euro dollar curve is now as inverted as what it was at the beginning of the global financial crisis. And this is done by Zero Hedge. And you can see anytime that we do get to those levels, usually within days of that happening, you do have some sort of major catalyst that sends price to the downside in a capitulation type fashion. And to be honest with you, whether you're bullish or you're bearish, we should all want that. You should really want the market to just finally flush out and capitulate, because that's how a new bull markets can get going. The longer that you grind sideways and the more choppy it becomes like that, the longer that this will drag on for. You want a capitulation for the market to continue. So let's look at the stock market very, very quickly over here, see how these closed off. So we have the NASDAQ, which is one of the most correlated, of course, to crypto. Same story as always. You got your 3 higher lows, and the markets like to work in these 3 drives. So you have 1, 2, up, and final wave 3, looking for that final push down. So let me just use the highlighter to show you 1 drive, 2 drives, and now we're looking for the 3rd drive. And that would be a beautiful area at that key quarterly level at the pre-COVID zone. That is where we want to see price get to on the NASDAQ, and that could be a potential for a major bounce area. The VIX, the volatility index for the S&P 500, look at that massive wick that got left behind on Friday. So it looked like it was rolling over, contracting back down, which would be good for the equity markets. Usually when this goes down, equities go up. And then look at that massive spike back up. So most likely continuation to the upside over the course of this week, to be brutally honest with you. If not, at the very least, there's going to be some sort of contraction. So one of the hopium things over here, S&P 500, came into our support box over here. Whether it holds is another story. I would like to see at least one more push over here. Any sort of push up over here that correlates into crypto and gives a bullish momentum into crypto, I'm definitely shorting. I'm going to be looking for short opportunities off of any upside moves. At the moment, I think longs are too risky. To be honest with you, I did try and take a long, I think it was on Saturday, and I got stopped out. So waste of time. Just look for shorts in a downtrend, longs in an uptrend, not really worth any other way. So S&P 500 futures, still also same picture over here, expecting a push towards that downside. Thanks, JB. Growing on you. I like that. Okay, one more quick shill over here for PrimeXBT, new sponsor. Big shout out to them, guys. Check them out. Something cool about this is that you can actually enter for free into trading competitions. So you can use a demo account, but if you win the trading competition, you can actually still win real money. Let's say, for example, you come first. They have different sort of pots, for example, but you can get up to first prize like around $1,000, and you're not even using real money. So interesting. I love that. I'm busy practicing with their exchange at the moment, and I will be using it going forward. You can find the link in the description over there. You do get a $7,000 sign up bonus if you use Kyledoops as your promotional code. Okay, moving on. The final chart over here. Look, probably already given it away. Let's see if I can make this big. Okay, here we go. So here is the chart, and this is the mystery chart that I was looking at. For those of you that haven't figured it out yet, all that I did was I literally inverted the yes, don't forget to sign up to the daily candle, guys. That's the daily candle for that comment. It's in the description below as well. I will drop my trade ideas and market updates alongside Sheldon. High Alpha newsletter. It is completely free, so check that out as well. Okay, looking at this chart, this is sadly the inverted chart for Bitcoin, which means if this is bullish, it's actually bearish. And you can see you got to shift your paradigm sometimes and look at a chart in a different way, because we tend to, kind of formulate our own sort of bias. And some of the altcoins actually look like they're breaking this trend line down, which means that it's bullish. And I'll show you which ones those are in a moment. But you have to be real with yourself and ask yourself, like, if this were just any other chart, here you have your primary resistance zone. Price came through, pushed through that resistance zone. That's now a new support zone. It's perfectly holding the trend line. You're literally right at the top. And like I just said, I don't really believe in double tops. So what would that mean? That means literally as soon as you cross that very, very small trend line, nothing major in a trend like this. You can see this is a strong trending move over here. You break through that trend line and your next target becomes the overhead resistance. And I'm just calling it exactly as it is. There's nothing complicated. I know a lot of people are targeting this zone over here. You can see this little tiny bit of price action that happened over here around, let's say, like $17,000, $18,000. But be real, guys. Like, do you honestly think that's going to hold? Do you think when you see a move like this, if this were some random altcoin that you're looking at, would you honestly be shorting this right now? No, you'd be longing this, meaning that you're looking for, what does that mean? If you're looking for a long like this, right, that essentially means you're targeting the resistance above, which this is unbiased. This is why I don't usually use these numbers. But when you look at it like that and you just mark out the primary zone that should form resistance on an inverted chart, that's coming between $9,800 and $6,000. Look, I'm definitely going to buy before then. To be honest with you, I think that buying between about staggering your orders between about $16,000 all the way down to $10,000 probably does make sense. But you have to call a spade, and that is exactly what the chart looks like. It looks super bullish, which is super bearish, in other words. So anyway, let's have a look at the other ones over here, because I did tell you some of them are bullish. ETH merge, bullish. In other words, this one is bearish as well, guys. This has not broken down the support trend line. It's in a straight uptrend on an inverted chart. You should be looking for more downside over here. Let's see Cardano, the Vasil hard fork. See, it's something a little bit different. This one doesn't look too bad. It's already breaking down the support over here. It looks like it's starting to roll over. I would say you take out that zone over there, which is 66 cents. Any closes underneath 66 cents, and this thing will probably start to crash down, meaning as on an inverted chart that Cardano will continue with its upside momentum. Here you have BNB on a 3-day chart as well. 3-day inverted, just to be clear, holding the uptrend, slowly started to break it down, but kind of held this zone on the left-hand side. So don't really have a strong opinion on BNB. like I'll just need to see how it reacts around this trend line. If it comes back and rejects off of that, then maybe this will flip bullish, meaning expecting on the inverted chart some more downside. Looking at Matic over here, this one is defying the odds, which is why I found it funny when I made that initial tweet over here. A lot of people were guessing Matic as the chart, but Matic has broken down this trend line. So this one probably could continue to the downside, meaning higher prices because it's an inverted chart. Solana, looking at this one quickly, still an uptrend, but it is slowing down within this region over here, and it has lost that trend line. So we never know. Maybe this one will also have some further upside, but it needs to start closing above this, or on this inverted chart below this 47.89. So if price starts closing above 47.89, then maybe there will be some sort of bullish continuation. So really try and shift your paradigm. The charts that you are considering going long on, or the coins you want to go long on, just go over here. It's very easy. So you see this cog on the bottom, that little gear cog. Click on that, and then there over here you just click invert the chart, and you just invert it like that. Have a look at some of your favorite charts inverted on a high time frame, like 3-day, 4-day, 5-day, up to a weekly chart, and ask yourself, is this chart going up or down? And that's an easy way to cure yourself of a bullish or a bearish bias. Okay, moving on. So looking at this over here from Midas the Fool, interesting name. He says Binance whales are just adding $150 million worth of BTC to shorts. Price has been unmoved for now. At least it ain't a boring bear market. So I thought, well, let's have a look at what some of these short to long ratios are. And a great site, shout out to James, James the sound guy. Just kidding. He hates it when we call him that. James pointed this one out over here. It's from coinalyze.net, and you can see the funding rates looking at the bottom one, the aggregated predicted funding rate. So green is, of course, the longs, red is, of course, the shorts, and you kind of want to see where the general bias of the market is at the moment. Sometimes whales it's called spoofing, where they manipulate the market and they place massive short sells, for example, at the top near resistance area, and then maybe they'll pull those at the last moment. That would be spoofing, which consequently sends the price shooting up. But what I can tell from this chart over here is essentially you can see that it's getting into a tighter and tighter range, which is in line with what we're seeing. And what that basically means is that there's a lot of indecision in the market. People aren't really sure whether they should go short or long. And consequently, you get a tighter and tighter range. And when that range starts to spike up, you want to be looking at these charts over here to see which way is it spiking. Are longs jumping in or are shorts jumping in? And where is price in relation to its supporting trend lines or resistance trend lines? Because that might give you a clue on which way the market is going to break, because volatility is going to enter very, very soon. I wouldn't be surprised if it started sometime in the next 48 hours. So we'll be paying close attention to this, studying this, and I will post my thoughts on what is happening around this chart in the Discord group. All you have to do, if you're not in the Discord group, use any one of the links in my description below and you'll gain access. The link to the Discord private group is in there as well, and it is entirely free, by the way. So looking at the daily though, which way could this thing break? Well, I think the daily has been a phenomenal chart to use using these simple EMAs, which is the 9 and the 34, as I've mentioned so many times. And yes, we are on a area of support over here, but you have to ask yourself, which one is stronger? Is the power of the EMAs that is sending price down going to overpower this trend line, or is this horizontal box of support going to be strong enough to bounce price off and through these EMAs to the upside? I think the answer is very, very simple, because all you need to do is back test this and look at the historical results. And the answer would be the EMAs. I side on the side of the shorts. This is a clear, strong downtrend, and I think it's just a matter of days probably before this lower supporting horizontal box breaks to the downside. This is, look, I'm not saying that we're going to shoot straight down to 12K. I don't really know. I think it's probable, but this would be the play out of that, the breakdown of the bearish flag over here. That's your measured move down to 12,667. And then in line with what Miles said on those important dates, we have them marked off over here: inflation data release, ETH merge, FOMC. Everything is all happening between these vertical trend lines over here, these dashed ones. So kind of imagine, look, how many days is that out? So including today, that's 8 days away to the start of these major events, to the middle 12 days away, and to the end 15. Guys, it's going to be interesting. The next 2 weeks, you need to be hyper focused. And I truly think that you're making a major mistake if you're going to be going long at these levels. I'm really trying to not be emotional about the markets and just be completely objective, looking at the data in front of me. I know a lot of big Twitter names are looking to go long, but I just don't see the point. I don't understand it. They're looking for small longs. Like, let's say, for example, they're looking for something like this. Let's grab a long position over here. This is what they're playing a move like this, for example. Is it really worth that risk? In my opinion, not really. To play a move like that straight into resistance with the hope that this thing will hold and bounce price off, like, great, cool, you're getting a nice little move. But I think right now, like, it's an 8% move. I think right now you're probably better off preparing to buy the dip. Rather stack your exchange up with cash now and set all your orders, decide on which coins you want, mark out the key horizontal levels, and start laddering in your orders at the most important zones, hoping that if this thing does break down now, then you can at least catch the dip. Because let's say, for example, this level holds. What would that look like? If this whole picture just started to flip completely bullish, what would that look like? I think you would have plenty of time to get in. It would look something like this. Okay, let's grab the pen. So let's say it holds. Okay, it pushes up over here. Let's say you break above this zone. Now it comes down. Now you got a little higher high. You start to form a higher low. Cool, you're kind of observing. Now you break down that trend line. How much have you really missed out on? Now it comes down over here. Cool, then you enter over here. Now, what is the subsequent move that just happened over here? Let's grab our ruler. So from current price action, you decide, I'm going to wait for confirmed breakout, and then I'm going to be ready to go long. Now you're entering on a pullback somewhere that's about 10% higher. So 10%, again, thinking in risk to reward terms, you're risking losing out on a 10% upside move. Where if you're waiting and this thing breaks down now, and it goes down to, let's say, 16K, that's a 20% move. Let's say it goes all the way down to the confirmed bear flag move, that's 35%. And if it goes down to that ultimate support, which we've outlined, that's 50%. So I think that the odds are definitely better on playing the downside. Now, I'm not telling you need to go and short the market all the way down to these levels. I just think that it's better to rather wait to prepare to buy the dip at these zones, or wait for something like this, these LARP lines that I just drew. Wait for higher highs, higher lows, breakout below this major trend line that's been holding everything down for so long, recapture these EMAs, allow them some time to start to turn up, and take it from there. That's just my personal opinion. That's the way that I would play it. Okay, looking at some of these charts on the 4 hour with the EMAs, we have our usual EMAs, which is the yellow 21, the pink/red, whatever color you want to call that, 50 EMA, and then the blue 200 EMA. So when I look at this chart, I see a strong downtrend. Price is pushing into the EMAs. The EMAs are doing their job, governing price to the downside. Now, this horizontal line that I've drawn over here is the same as what I showed you on this chart when you look at the top section over there. And you can see that there is a lot of pressure over here. I don't think that it's going to take too much for price to start to break below this. As soon as you lose that level, there is going to be a major acceleration to the downside. And I'd imagine that is going to match up with everything that we're seeing. It's going to match up with the DXY rallying. It's going to match up with stock market crashing, with the open interest shooting up, volume kicking into the market. These are all things that you want to see. You want to see massive volume, massive open interest kicking into the market, and a strong sell-off to either the downside or the upside to create a major pivot or shift within the market. It may take a while because this thing can squeeze in like this over the next couple of days into those important dates. You can see something like this, and it could get even tighter. You could get an even more narrow range than what we currently have. And as long as, if you're seeing, for example, this, if you're seeing lower highs throughout, it's starting to create almost that descending triangle, which those have high hit rates. Charting patterns are mostly useless. I'm just going to say it as it is. They're mostly useless, but ascending and descending triangles are probably the only useful charting patterns that you can use. They have an extremely high hit rate. And if you start to see something like that, that would confirm it has a measured move breakdown to the zones that we are looking at. So that is Bitcoin over there. Let's have a look quickly at Ethereum, what Ethereum's doing. Ethereum is okay. Look, we covered this last week. I think I also put this one in the newsletter, and you can see you got a spike into that. My drawings that I put out, I said any sort of a spike into this circled area, I'd be looking to add to my short position, expecting further prices to the downside. So if I didn't take the trade, but if you did, congratulations. Price stuck below all the EMAs, expecting further downside in that. Cardano, I think, looks a little bit different when I last looked at it. You can see, look, it is above the important resistance over here that is now flipped into support. And the EMAs are trying to cross to the upside. Definitely long these things with caution, because what are the chances that they're going to defy the odds of the whole market? Very slim chance, but it can happen if you do want to go long. Maybe there is something there behind the Vasil hard fork after all. We'll see. BNB caught below all its important EMAs. Let's see. Matic has recaptured the EMAs. It's got a golden cross over here, so possibly further upside. If I were to just throw out a random target over here, I would say anywhere between about 95 cents and about $1 would be the upside target. But I personally view this more as a range like this. I think that it's more likely that it's ranging than the whole market is switching. You've got your range high, range low, currently caught in mid-range, probably shoot up to the top side and then expect further downside in line with the rest of the market. Solana over here is caught below all its EMAs, so also not looking too good. Okay, moving on to this one over here. This is your main range on an hourly chart, and essentially what I'm viewing. Up to you if you want to play it like this. I think longing at the moment is dangerous because this could break down at any moment. But if you were looking to long, you have your range low coming in at $19,678. I'll say it again, $19,678. You have your range high at $20,402, so 20,402, and then your mid-range, you can just use your fib and measure that out. It's coming in at 20,040. So if you wanted to really play the trading game and you feel like you have to trade for some reason, then I guess that is an option that you can. For example, you're just going long over here. You have your stop loss underneath these wicks like that. So the further down, if price pushes through over here, grab a quick long, targeting towards the upside, TP half at mid-range, TP the last half at the top over here, and immediately you flip short and then target back down to the bottom. I think traders have absolutely milked this range for everything that it's worth. I don't know how much more you're going to get out of this, but if that's something that you want to do, feel free. Go for it. It is a clear pattern and opportunity over there. So guys, I think that brings me to the end of today's video. If you enjoyed this video, please make sure that you give the video a like, hit the subscribe button and the bell notification. I'll see you guys all in the Discord community group over there. Again, if you do want to join, all you need to do is click the link over here. Make sure that you sign up using any one of the links below, and then they'll ask you just for verification of that. They'll grant you access into the Discord group. And that is it from me, guys. Until next time, I will see you all on the following video. I appreciate each and every single one of you, and I hope that you trade well and trade safely out there. Cheers for now.
James, the guy who does the sound.